Welcome back to the channel, everyone. As of January 21st, 2026, Strive Inc., trading under the ticker ASST on the Nasdaq, is priced around 86 cents per share, reflecting a decline of roughly 3% during the session. For many investors, a stock falling below $1 is often dismissed as weak or failing. Compared to large-cap names like Apple or Nvidia, penny stocks are usually ignored. However, ASST's current price action does not tell the full story. Subscribe to the channel. Following its late 2025 merger with Strive Asset Management, ASST is no longer the social media-focused company it once was. The firm has fundamentally transformed into a Bitcoin Treasury company, designed to provide leveraged exposure to Bitcoin through a publicly traded equity. Despite today's decline, trading volume suggests aggressive accumulation. Intraday data shows repeated buying interest near the 85 support level, indicating that large participants are absorbing shares during pullbacks. This behavior contrasts with the typical panic selling seen in most sub-dollar stocks. AST is increasingly functioning as a proxy for Bitcoin, similar in concept to MicroStrategy, but with a different structural approach. Instead of relying solely on cash-based purchases, the company has introduced a tax-efficient Bitcoin for equity exchange mechanism under Section 351. This allows long-term Bitcoin holders to exchange their BTC for ASST shares without triggering immediate capital gains taxes. This structure enables AST to grow its Bitcoin reserves without deploying cash, creating a significant advantage over traditional treasury models. As a result, the company can attract legacy Bitcoin holders seeking regulated equity exposure. Institutional behavior further supports this shift. While many funds are restricted from owning stocks under $1, options activity in AST has increased sharply, indicating speculative positioning for a potential rebound. Institutional ownership has also quietly increased, suggesting longer-term strategic interest rather than short-term trading. Currently, AST holds over 7,500 Bitcoin, placing it among the largest corporate Bitcoin holders globally. This makes its valuation increasingly dependent on Bitcoin's price rather than traditional revenue metrics. From a technical perspective, the stock has declined for several consecutive sessions, falling from approximately 95 cents to 86 cents. Short-term indicators remain weak and volatility remains elevated. However, unlike many penny stocks, ASST carries no significant debt and holds nearly $67 million in cash, positioning it differently from distressed small-cap companies. When comparing the market capitalization to the value of its Bitcoin holdings, ASST often trades at a discount to net asset value, highlighting a disconnect between price and underlying assets. Critics argue that continued preferred stock issuance may dilute common shareholders. Supporters counter that as long as Bitcoin per share continues to rise, dilution is offset by balance sheet growth. This creates a high-risk, high-reward financial structure centered on asset accumulation rather than operating income. Looking ahead, AST's future depends on three main factors: Bitcoin price movement, which directly impacts balance sheet value; upcoming earnings on February 24, 2026, reflecting the full impact of the merger; Nasdaq compliance, as the stock must regain and hold above $1 to maintain listing standards. Management has indicated a preference for achieving compliance through asset growth rather than reverse stock splits, though no outcome is guaranteed. AST represents a highly volatile